Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2024, and we're diving into the latest earnings report from Entegris, a leading supplier of advanced materials and process solutions for the semiconductor industry. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Entegris has just released their third quarter earnings for 2024, and there's a lot to unpack, especially given the current state of the semiconductor industry.
Revenue and profitability overview. Let's start with the top line. Entegris reported net sales of $808 million, which is a 9% decrease from the previous year. However, when excluding divestitures, adjusted net sales actually increased by 7%. John, can you explain this discrepancy?
Absolutely. The decline in reported net sales is primarily due to the impact of divestitures. When we exclude these, the core business actually grew by 7%, which is a positive sign. This growth is reflected in their non-GAAP earnings per share of 77 cents, which is significantly higher than the GAAP EPS of 51 cents, indicating strong underlying profitability.
That's interesting. How did they manage to maintain profitability despite the sales decline?
Entegris has focused on operational efficiencies and cost management, which is evident from their gross margin improvement to 46%. Their operating margin also increased to 16.9% from 13.2% last year, showcasing effective cost control measures.
Operational efficiencies and future outlook. John, Entegris has reported a gross margin of 46% and an operating margin of 16.9%. How does this compare to their historical performance?
These margins are quite robust, especially in a challenging market environment. The gross margin improvement from 41.3% last year to 46% this quarter highlights their focus on cost efficiencies and operational improvements. Looking ahead, their guidance for the fourth quarter suggests continued strength, with expected sales between $810 million and $840 million, and non-GAAP EPS ranging from 75s to 82s.
And what are the key drivers for this optimistic outlook?
Entegris is banking on the recovery of the semiconductor market and the increasing complexity of device architectures, which require their advanced materials solutions. Their expertise in materials science is becoming increasingly valuable as new technology nodes are developed.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did Entegris's different business segments perform this quarter?
The Materials Solutions segment reported sales of $346.6 million, while Microcontamination Control and Advanced Materials Handling posted $287 million and $182.2 million, respectively. Notably, Entegris has realigned its segments, combining Microcontamination Control and Advanced Materials Handling, which should streamline operations and enhance focus on core competencies.
What strategic initiatives are they pursuing to drive future growth?
Entegris is investing in technology leadership and expanding its manufacturing capabilities, particularly in Taiwan and Colorado Springs. These investments are aimed at capturing incremental content per wafer opportunities as the semiconductor industry evolves.
Risks and challenges. John, what are some of the risks and challenges Entegris is facing?
One of the main challenges is the slower than expected recovery of the semiconductor market, which has been a transition year for the industry. Additionally, Entegris carries a high debt load of $4.06 billion, which could be a concern if market conditions worsen. Competitive pressure remains significant, and geopolitical risks, such as tensions in the Middle East, add another layer of uncertainty.
How is Entegris addressing these challenges?
Entegris is focusing on maintaining strong profitability and funding critical investments to improve their technology leadership. They are also managing their debt through strategic capital allocation, including potential share repurchases and debt repayments.
Key takeaways. To wrap up, Entegris has shown resilience in a challenging market with a net income of $77.6 million and a strategic realignment of its segments. Despite high debt levels, their positive guidance for the fourth quarter is encouraging. John, any final thoughts on Entegris as an investment?
Entegris is well positioned to capitalize on the semiconductor industry's recovery thanks to its strong technology portfolio and strategic investments. However, investors should keep an eye on their debt levels and market conditions. Overall, it's a promising long-term play for those willing to navigate the current uncertainties.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Entegris's performance in the comments below.